We explore what it means to live in a world where work, wealth, and wellness flow from who we are, not what we're told to be. Web3 isn't just technology, it's a return to truth, a remembering that our connections are capital, that creativity is currency, and that every act of kindness is data the universe never forgets. So take a breath, feel your power, and let's tune together because the future isn't waiting, it's already human. Right now, Bitcoin is trading at $62,887. Ethereum sits at $1,777. Since May, the stablecoin market has contracted by $10 billion. That's the largest monthly decline since the Terra Luna collapse, yet analysts aren't panicking. Real infrastructure keeps growing even when speculation leaves the room. Capital is rotating. Crypto IPOs have stalled as investors chase AI semiconductor stocks. Empery Digital just sold half its Bitcoin treasury, 1.4 million coins, to fund an AI data center. Companies that raised billions during the 2025 digital asset boom are now pivoting away from blockchain. This looks like abandonment, but it's actually a market learning to distinguish between hype and human utility. Tether has dropped from $190 billion to $184 billion. Circle fell from $80 billion to $73 billion. Yet new regulated stablecoins like Global Dollar and OpenUSD are gaining ground, backed by traditional finance, designed for mainstream payments. The infrastructure is maturing. Wall Street's Standard Chartered still projects a $2 trillion stablecoin market by 2028. This isn't an ending, it's a sorting. Meanwhile, Bitcoin barely flinched when the US launched fresh strikes on Iran. That's not weakness, that's evolution. Bitcoin is decoupling from fear-driven narratives and coupling to something more fundamental: global liquidity and real economic utility. When speculative capital leaves, what remains are the systems people actually use: the blockchain rails that settlement runs on, the peer-to-peer networks that bypass failing institutions, the tokenized communities where trust replaces surveillance. You can start building human-powered micro-economies in your own community right now. Join us in driving currency for humankind by visiting us at humn.world. Back in Philadelphia, small businesses just got hit with a $100 million tax windfall after the city ended a decade-old exemption. Solo therapists, consultants, gig workers are seeing their bills jump 10 times overnight. One clinical psychologist went from $1,200 to nearly $15,000. The system isn't designed for the future of work. This is why the convergence of Web3 and community economies matters. When traditional institutions fail to adapt, human-centered alternatives fill the gaps. Blockchain isn't about making speculators richer. It's about creating financial infrastructure that serves freelancers, side hustlers, and community builders who are already living the future of work. The capital rotation we're seeing isn't a crisis, it's clarity. The technology that puts power back in human hands isn't going anywhere. As AI reshapes every industry, the communities that thrive will be the ones that remember: technology should serve humanity, not the other way around. The future of blockchain isn't just about faster transactions or more complex smart contracts. It's about creating systems that give people more control over their data, finances, and digital lives. When we prioritize human needs over technical novelty, blockchain becomes a tool for building the kind of world we actually want to live in, one where technology serves humanity, not the other way around.